Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey gang, welcome back. If you're in multifamily real estate investing, a lot of people think that finding the really good deal is the key to success. Other people think raising the capital for the deal is the key to success. Some folks know that really it's the management of the asset that can make or break a good deal. And today, our special guest zooming in from the Dallas-Fort Worth area, Paula Nichols, knows all about that because she and her husband run Apogee Capital, and their key to success, especially in challenging times, is really good asset management. So Paula, welcome to the show. Great to have you.
Great to be here, Dave. Thanks for inviting me.
Yeah. So Paula, let's start first things first. Maybe as of right now in 2026, what does your portfolio currently consist of? What kind of properties? How many total units? Just paint us a picture.
Yeah, we approximately have 1,200 units all around Texas and Oklahoma. In 2026, we're really focusing on the Dallas-Fort Worth market as we see a really great opportunity to really take advantage of the lower prices that the industry is experiencing.
So 1,200 units spread across approximately how many different communities?
I would say 10, about 10.
Yeah.
Yes.
Perfect. And you're seeing lots of opportunity coming along. What's kind of your ideal buy box? What kind of properties? What size of properties? What is that?
Yeah, no, that's a really great question. And we have obviously, as we have grown as a company, kind of narrowed down, and as the market has shifted, we have become a little bit more, maybe even demanding when it comes to the vintage. And so we're looking at 1980s plus, so a newer sort of property, moving away from the 60s and 70s. We are looking around 150 plus units. I would say between 150 to 250. That's kind of our sweet spot. We just see a lot of efficiencies and synergies in that size. And again, I think we look at good neighborhoods and opportunities to really be kind of like improve the property and the operations in markets that are have those fundamentals, right? So population growth, employment, and average income. So those are kind of our key criteria.
So you're trying to do a value add of some sort to these properties?
Yes, I feel like each opportunity is pretty unique. We have done one that's like pretty heavy value add, but we see a lot of we're kind of open to those who have struggled operationally. And so it's not even the physical improvements that we're coming in and doing, but we're doing more of that operational efficiency. So they either are hurting due to occupancy, they just have their own property management in place, or they haven't been able to really target that market audience. And so we come in and we're able to do that. And we've proven to be successful in that approach. Obviously, there's still, turns to be made and some improvements on the overall property to be made. But we haven't had to do a lot of like super heavy lifting on the physical part, but more on the operational.
Okay. Well, we'll definitely dive into that in a second here. But
yeah,
first of all, what role do you and your husband, Apogee Capital, play in the whole thing? Like, do you work by yourselves? Do you work with co-GPs? Are you part of a team that does these deals? How does that side look, Paula?
Yeah, so we are coming in as the KP and kind of lead operator. Okay. So Jonathan's focus, his background is in aerospace engineering, transition to multifamily. And so he's really, really great at building relationship with brokers, as well as like ensuring that the underwriting has the assumptions that are attainable, right? Because again, you can plug in any number, you can make any deal work. But I feel like he has really honed in and really mastered the underwriting of multifamily. And so he's bread and butter is the underwriting and broker relationship. And so he kind of leads that effort. So the acquisition
this is your
part,
husband, correct?
This is my husband, right? That's right. And so he kind of leads the acquisition side of things. And then for me, I kind of lead the operations side of things. So we do rely on third-party property management. And so they require a lot of like oversee and
Got to manage
oversight.
the
And
managers,
yeah,
right?
exactly. And so just providing that accountability and that guidance. And so I kind of take on more on the second half of the project, which is after acquisition, ensuring that we are operating in order to meet those projections. We do actively partner with co-GPs that really help on that third piece of the pie, which is the capital, right? So we may find a great deal and we may operate a great deal, but if we do not have our investors coming in alongside, then there is no deal. And so
Yeah.
we do have strategic partnerships with co-GPs that align in our values, that align with kind of who we are and what we stand for. And so we are very blessed to have those partnerships and always meeting new people. Kind of we discuss like active and passive partners that want to come alongside.
Very good, Paula. All right. Well, let's take a look at your specialty then, which is the operational side of things.
Yeah.
So a lot of people, they give good lip service to the idea of important operations and yada yada. But what are some examples recently of specific things that you've done, especially in today's a little bit challenging environment with some multifamily operators have just really gone through the ringer over the last few years. What's an example of something that you guys have done with a specific property to help it perform even under today's current challenges?
Yeah, so I will kind of quickly summarize like our high level strategy, right?
Yeah.
I think of three things that really maximize the value, and that is like people. So making sure that we have the right people in as part of our team. And so that specifically, it's not only the PM, although the on-site staff is like super, super critical for the success of the project, but also having the right contractors, having the right lender, having the right insurance broker. And so really honing in on who our team is. So that's the first P of maximizing value for people. Then the second one is performance. And so I'm a numbers person. My background is in finance. I did management consulting, and I love numbers. And I think that the devil's in the details. And so when you look at your financials, you're going to find a lot of opportunity that you can really materialize and benefit from if you look at your trash bill, or you look at just anything that you are overspending. If you spend a lot of time on your budget on January, or I guess you will do it on November, December, you can now track to that budget very religiously and then really quickly see what outliers are impacting your NOI. And so I would say when it comes to performance, being very like number and data driven to ensure that your project is performing. You don't want to come end of the year or 5 years down the road and be like, oh, wow, like why are my expenses out of hand, or why is my income not where I need it to be? And so I would say performance is really, for me, like kind of like the second P of maximizing value. And then the last one is the physical property. I cannot tell you how many properties I walk, just competitors. I love to secret shop or competitors to see what they're doing. And it's just, they're not well maintained, right? And so ultimately, I like to say like there is a benefit of having real estate as it's a hard tangible asset that depreciate, and we can take advantage of that on a tax perspective. But the reality is that it's also a hard asset. But you don't want to
let it depreciate. Right?
Exactly. It's like a double-edged sword that we need to be aware of. That it has its awesome benefits, but it also has its drawbacks in a way. And so we want to be aware that we are protecting that physical asset that we have invested. And so by making sure that our physical property is maintained, and not only doing the bare minimum when it comes to required, maybe lender required changes or repairs, but doing, when you walk your property, you will see, right? Like, is the gate broken? Are the shingles? There was one time I was walking a property and I saw like shingles flipping, and I'm like, what's happening? Well, we had to do a roof change. And thankfully we discovered that on time to use insurance, and that project actually sold last year and it did it really, really well. But if you're not walking your property and protecting this tangible asset that you're investing, I think you can, really negatively impact your investment. And so those are kind of like the people, performance, as well as physical property that I think that we try to implement across our projects. But happy to speak about a specific example or just kind of dive into
I was going to ask, I love your 3 Ps, and that's a good anchor to keep in mind for sure. You gave us an example of the physical one with the shingles. What would be one of your favorite examples of like a people turnovers, a property that you're really able to maximize the people side of things?
Yeah, I would like to like maybe do a contrast between two properties.
Sure.
So
Yeah.
yeah, we acquired a property a couple years back in Lubbock, Texas, which is a tertiary market. Lots of benefits. We got it at a very, very good price. It's a really great, property. We were able to like return almost 70% of the capital last year after a refi. So very good deal, but there is limitations when it comes to accessing amazing people in a small market. Is
Yeah.
that there is less people to hire and less people to choose from.
Yeah, you
And
got one or two property management companies there, right? That's it.
exactly. And so it's very limited. And even the big property managements that say that they manage in these tertiary markets, they are not there. They're not present. They don't know. They don't have the connections. And so we had, heard very good things about this specific property management. So we went with them. And again, we walked their comms, we did all the due diligence. And unfortunately, they signed up for more than they could perform. This property was 70% occupied when we acquired it. And so it was a very heavy lifting. And I think that there are some good PMs that are able to do like maintain at a 90-ish%, but there's only a few that can actually do the heavy lifting of coming from 70 to 90. And so we ultimately had to like literally relocate to Lubbock for a few months to
Wow.
ensure that our property, achieved that 90% plus. And I cannot tell you, I fired a few people. While I was there. And, I always give opportunities. I always try to coach, but unfortunately, like in some projects, there's like not a lot of room for error. And so being present and having to let go of some people and having to keep some more maybe junior staff that was willing and, able to work hard and learn. Now we have found a good PM and, the property is at 95% occupied. We feel very encouraged by the performance, but it took a lot of work to find the right people.
Yeah.
Now, compared to our project right now in DFW, we have found a really good PM partner that have the expertise, that has the experience. And I was even talking to the director of operations yesterday, and she was like, "Hey, Paula, like our goal, like I'm like, hey, I'm here to help. Again, we just acquired another property that's 70% occupied, and we were like, okay, like we have to do this really successful takeover." And she's like, "I know you're willing to help, but like I want you to just like sit back and like just watch us do what we do great." And it was just like a different perspective and mindset. And I really think that that's how it should be, because we are paying them to do, like they are the experts. And so that's kind of where the people contract of like really, once you find the right partner and finding the right people to run your property can make such a huge difference.
Oh, absolutely. I was interviewing another guest the other day, and property managers, like finding good ones, are so important that this gentleman has actually partnered with the property management, and they bring them in as equity partners, small equity partners in their deals.
Yes,
to give them a
yes.
very vested interest. Yeah.
I mean, I would be open to that with the right partner, because you
Of
definitely,
course.
it's a marriage. And so somewhere kind of halfway in the middle to what you're
Yeah.
like, what the person did, it's really aligning bonuses to performance driven and to performance that is going to help you. And so usually they have their own bonus structure, and I like to kind of, let's reopen that conversation and let's align something, because what you may feel it's beneficial, right? Like if you get a little bit of a fee every time you close a lease, that's good, but it may not be ultimately like I want retention. I want, and so I think that aligning those bonuses could be an incentive to create that partnership. Yeah.
Okay. And then the one other thing I'd love you to give an example of, because you're the numbers person and coming up with, the performance of a property. What's your favorite story of like just really lowering the expenses, or lowering the expenses, because that's really what the reviewing that budget every year is all about. What's an example of that?
Oh my goodness. So again, I feel like each property is a little bit unique,
Of course,
but I often see opportunities in service contracts. So as little as like trash, as I mentioned earlier, or even people sign up for like really expensive software, that they only use the standard version of it. But then the property management is signing you up for like the $3,000 a month or $2,000 a month. And the reality is that you can just pay $1,000, or 500. And so looking into those invoices of third-party services, you probably find that you're paying for 5 lines of phone versus 1 line. And, maybe you're saving $300. Well, that's not a huge number a month, except that you multiply that, and by the months, and then that ultimately impacts your NOI. And so,
Huge. Yeah.
so I would say third-party services, like anyone that you have a contract, landscaping, you can be paying $50,000 a year, or you can be paying 20,000. And that, again, it could be just substantially different. So I would say third-party services. The other one is utilities, ensuring that you are billing back utilities. In the Texas market and Oklahoma, we bill back. And in Texas, we can, based on the amount is usually allocated, making sure that you are allocating it correctly, that these third-party services that are billing back the resident, that they're doing it correctly. I cannot tell you how many times I've seen that they're not billing back the percentage correctly. And so you're leaving a lot of money on the table. So I feel like those are kind of two easy ones. Again, shopping insurance, some people just renew. And we're saving thousands of dollars because insurance now has a little break this year. And so making sure that you're doing all of those kind of smaller tasks.
All those nitpicky little things, but they really do snowball and add up. And like you say, that multiplier, if you do all of that and you end up saving $50,000 or $60,000 a year, well, multiply that by whatever to come up with how much that's increasing the value of that property, the net operating income, right? So
yes, it's exponential, and so one thing that I just did is we were collecting fees for these like renters insurance fees, and we were paying, let's say the renters insurance company, we were paying like $10, and we were charging the resident $14. And so we were making a $4 spread. That's good, but it's not as great as if I just, like maybe to pay less. Like even if I pay $8 for the renter's insurance and continue to charge the 14, that, times 200 units times 12 months, it creates almost, I think I did the math, it was like a $200K impact on our NOI. And so just like kind of like creatively looking at, obviously you don't want to fee your renter to death, but you want to make sure that those fees that you're charging, you're keeping as much as you're able to. So
you're optimizing the profitability of the property.
Right. Yeah. And how much that, right? Like instead of like putting granite countertops, like that didn't cost me much. I mean, it did cost my time and change efforts, but it didn't cost me, a crazy amount of dollars per unit. It's just a operational change.
Yeah, exactly. Yeah. Huge. Paula, this is fascinating stuff. Thank you very much for sharing that. So these days, Paula, who are you guys looking to connect with, you and Jonathan?
Yeah, so first will be limited partners. So if you are a busy professional and you're interested in real estate, want to build wealth with multifamily, like we are here to serve you and to partner with you. So that will be one. And then two, if you are a co-GP and you enjoy raising capital and that's kind of your bread and butter while playing other roles as a GP, I would love to connect with you as well. We're always just willing to honestly help and support your growth and your journey in real estate.
So what's the best place for people to connect with you, Paula?
Yeah, so our website would be the best place. There is a contact form. Our website is Apogee MFC, and that's spelled APOGEEMFC for multifamilycapital.com.
Apogee M. Sorry, what was it?
ApogeeMFC.com.
Got it. Very good. And remind us what Apogee means.
Yeah, so I am actually not the aerospace person here, but my husband named it after, his career in aerospace, and it means the farthest point in the universe in space. And so think of it more like slalom or climax, or so yeah, that's what it means.
It's the summit in
summit in space, exactly.
Very good. No wonder I wasn't familiar with that word, but that's great. Paula, thank you so much for being on the show. This has been really good. Thank you for your sharing your expertise.
Yeah, thank you for having me, Dave. It has been so fun.
All right, everybody. Thanks for tuning in, and we'll see you again on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviewyou.com.